Good morning, hello and welcome to this Money Controls live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And we have come to the middle of the week, and yesterday we did see some recovery, but whether or not Nifty can hold on to this 24,800 levels is the real test for the Lal Street at this point. But for start, GIFT Nifty trends, they're suggesting a muted start for India. If you look at the global cues, it has been quite lackluster. US markets were muted overnight. It was after seven sessions, S&P 500 did not hit record high in the yesterday's trading session. But yes, we have the FOMC outcome tonight, and the rates are expected to remain on hold between the 4.2 to 4.5% range, and that the market already knows. But what the narrative would look like for the rest of the fiscal year, given that the barbs we have seen passing between Jerome Powell and US President Donald Trump, is something that we would be watching out for too. But yes, coming to the Asia-Pacific markets, they were mixed. However, if you look at the trifactor, the oil prices, dollar index and the US Treasury yields, all of them have edged higher, hinting that some caution for India we need to take ahead. But yes, we have more earnings reaction which will be taking place today. L&T Asian Paints, that came out with its numbers yesterday, and while L&T was a beat across parameters, Asian Paints was still lower in comparison. Now, we will be discussing all of this and your stock-related queries too, so keep posting them on our live feed and we'll take them up shortly. Now, let's take a quick check of the top headlines this hour. Stocks on Wall Street end lower as investors await Federal Reserve's rate decision later tonight. Asia markets have opened mixed as US and China are likely to extend their 90-day tariff truce. Meanwhile, the GIFT Nifty is indicating a marginally lower start for Indian markets. Oil prices edge higher by 3% as US President Donald Trump ramps pressure on Russia to end war against Ukraine. Gold prices also glitter ahead of Fed's rate decision, which will be later tonight. As the 1st of August tariff deadline looms, US President Donald Trump says that a deal with India has not been finalized despite months of negotiations, hints at export duty of 25% if talks don't materialize. And in key results, L&T reports healthy start to FY26 with robust order wins that are up 14% from last year. Also, watch out for results from Tata Steel, where the company is expected to report a single-digit decline in its top line, while Power Grid will also roll out its numbers today, where they're expected to see a revenue increase. And India's first and largest security depository, NSDL 4,000 crore rupees IPO, is set to open for subscription today. It is priced between 760 to 800 rupees per share. The company has raised 12,000 crore rupees from anchor investors ahead of the IPO opening. All right, if we look at yesterday's trading session, we did see some bounce in yesterday's trading, in the second half particularly. Nifty recovered to above that 24,800 levels. And what led to the recovery that came in from the index heavyweights like your Reliance Industries and HDFC Bank. Also, L&T was also one of the top movers of yesterday's trading session on the back of its good Q1 numbers that is coming today. But yes, broader markets, they outperformed in yesterday's trading session. If you look at the India VIX levels, that eased about 4%, and all of the sectoral indices ended in the positive territory. Some of the sectoral indices which did outperform, that was your Nifty Metal and the Nifty Pharma index, because that rose about 1% each in yesterday's trading session. But yes, coming to today, more results will be watching out. We have Tata Steel, which will be reporting its June quarter results, Hyundai Motor, Power Grid, all of these will be reporting their June quarter performance. And of course, we have Meta also, which will be reporting its results today from the US market. So we'll watch out for this going ahead. But yes, the FOMC meeting will be tonight. Rates are expected to remain on hold, as I was mentioning. But yes, we will be tracking, what Powell has to say for the remainder of the year, whether rate cuts could materialize. But yes, coming to the primary markets, we have some new IPOs which will be opening today. NSDL, like we were talking about, Sri Lotus and M&B Engineering are the other IPOs which will be opening today in the primary markets. But yes, coming to the cash markets, how the flows have been, FIIs continue to be net sellers. They've sold stocks, which is about 4,500 crore rupees in the cash markets, and DIIs offsetting this impact with about buying stocks, which is worth about 6,000 crore rupees in the cash markets. Option Q's data, some positivity. Nifty put call ratio jumping to about 0.8 from 0.64 levels, and the stock that continues to be a part of the F&O ban, that is your RBL Bank at this point of time. Now, just a couple of minutes before we go to the open, we'll watch out how the rates are going to pan out today, given that the trends have been quite muted and the global cues have been, not quite supportive at this point of time. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Ajit Mishra, Senior Vice President, Technical Research of Religare Broking. Ajit, yesterday finally Nifty ended in the green above that 24,800 levels, but the structure has been fairly range bound below that 25,000 levels. How do you think the structure would look like for the coming days?
Hi, good morning. So yes, it is just a single day bounce. Means we were oversold. Means from the last 4 weeks, we were seeing that markets are gradually drifting lower, and in fact, in the last three trading sessions, we were seeing the same trend continuing. So oversold position in the heavyweights combined with strong support at 100 EMA, which is placed around 24,580. That resulted bit of a respite, for the market in yesterday's trade. But one should not get carried away because, when it comes to the heavyweight, especially the banking heavyweights, barring HDFC and ICICI, majority are still struggling. IT, we are also not seeing any kind of meaningful recovery. It's Reliance basically, which is trying to form a base around 1380 area. So that is, helping the index to pare some losses. But at the same time, 24,830, which is the immediate hurdle, and then we have around 25,000 area where we have, multiple resistances. So I believe it's going to be more of consolidation tone in case if markets manages to hold this 24,580, 550 area. So in the interim, banking performance is going to be critical because 56,000 in the banking index is the area basically where we are eyeing as a critical support. Yesterday, we penetrated that level for the intraday basis, but on the closing basis, we could manage to hold. But upside still seems kept because HDFC and ICICI are holding. It's difficult for banking to maintain the overall positive momentum. So as of now, consolidation is more likely in both the indices. So one should stay stock specific and focus on more on defensives as of now, wherein we are seeing sustained buying.
Focus more on defenses. Let's talk about autos, Nifty Auto Index, particularly Ajit, because we have some auto numbers which will be rolling out tomorrow itself, and we have auto sales data as well. How do you see the index to pan out for the couple of sessions at this point of time?
So see, if you see the auto index has been hovering in a very tight range, and that is what reflecting in most of these stocks also means either the stocks which are trading at the record highs, stocks like M&M, Eicher. Then we have stocks which were witnessing a recovery or rebound like Bajaj Auto, Hero MotoCorp. They are all stuck in a range. So for the index, we need a decisive close above 24,150 mark. Then only we can see the next meaningful recovery. Otherwise, sideways tone might continue. But the good part is that the downside also seems capped. So one should selectively, play this pack. And the top gainers or the top performers from the past, like TVS, M&M, Eicher, this is something that one should be focusing on in case if there'll be any further dips.
Okay. Let's also talk about Nifty Pharma Index because that has shown quite a bit of a momentum. It's in just like 5 to 6 days, it's up about 3% despite this muted sentiment in the market. Do you expect further rally going ahead?
So yes, in fact, if you see that some of these pharma majors, they were anyways holding strong. We were seeing continuous, buying interest emerging on every dip. So in fact, some of these stocks which were sitting on the sidelines like Sun Pharma, Lupin, there also we started seeing some traction. So yes, pharma is likely to continue this overall positive momentum. But at the same time, one needs to be selective. So stock like Biocon, wherein we see fresh traction, Dr. Reddy's, wherein we are seeing consistency in the trend. So all these stocks is something that one should be preferring. And in case if there will be any further rebound from Sun Pharma, Lupin, that would further strengthen the position.
Okay. Let's also talk about Nifty Realty Index because that has shown a little bit of an underperformance despite what Nifty Pharma has indicated. In just 5 to 6 days, the index is down about 7%. Can we expect the pressure to continue going ahead?
See, we are seeing mixed trend within the rate-sensitive basket. So, realty was among the top hit. Earlier, we were seeing continuously outperformance for several weeks. Uh, Post this recent earning announcement is basically something which is dragging the index lower. But I believe with stability in DLF and the other heavyweights like Godrej Property at the lower end, there could be possibility of consolidation, but outrightly one should not be bullish. Means in case if you are planning to accumulate the realty counters, DLF looks strongest among the all, and then selectively one can pick the other names like Godrej Property, Prestige, also on dips.
Okay, all right. Let's talk about one stock in focus today, that is your L&T, because that came out with its numbers yesterday and we did see that the net profit grew about 30% on a Y-on-Y basis. Then we had the top line that jumped about 16% on a Y-on-Y, and EBITDA also increased by 13%, and margins, however, that was a lackluster because that contracted by about 20 basis points. But yes, the new order flow wins and the order books stands quite healthy for L&T, and the brokerages have also remained quite positive on the counter. If you look at Jefferies, they've given out a buy call. They've raised the target price to about 39.65 rupees. They believe that the 33% rise in the order flow puts the company in a comfortable position to meet its guidance as well. And so far, the 1 year underperformance of L&T could actually get offsetted by this particular good numbers that has come in. But yes, the stock has been so far range bound. Can we expect a good upside going ahead, Ajit, for L&T?
Yeah, so possibly yes, because if you see, it's been almost 1.5 years now that the stock has been hovering in this range, upside around 3,800 mark, 3,200 is the lower base. Currently, we are in the middle of the band, and now we are set to reclaim the all the key averages. Short-term averages plays around 35-10 area. So once we cross this mark, then probably we can see further recovery, which could help the stock to inch toward 3,600, 3,650 levels. For those who are holding long position, they should definitely stay put with 3,400 as a stop loss.
Okay, all right. Good momentum could come in for L&T as well. Let's also discuss about Asian Paints because we did see that the profit dropped about 6% Y-on-Y in the first quarter itself, and revenue also marginally fell to about 8924 crore rupees in Q1 itself. If you look at brokerages, however, they have remained quite bullish on the counter despite this performance because they believe that there is some demand green shoots which is emerging in the counter, and Q2 could see the benefit of an early festive season. If you look at HSBC, they've maintained a buy call on the counter. However, they've cut the target price, but they believe that there is a broad competitive equilibrium which will be reached over FY27 itself. If you look at Jefferies, they've also given out a buy call on the counter and they have raised the target price to about 2,900 rupees because they believe that the demand commentary was quite positive, although the market should stay competitive going ahead. Just 8 seconds to go before there. But Ajit, any calls on Asian Paints at this point?
So, Lovisha, we are seeing attempt of recovery, but off late it failed to hold above the long-term averages, which is placed around 60 area. So once, let's say, we reclaim this level, then probably we can see further rebound towards 2,600 mark. So one should not be outrightly bullish, but yes, in case if somebody is planning for a short-term rebound, they can go ahead with the long position with 2320 as a stop loss, with 2,600 as a positional targets.
Okay, 26 as a positional target. All right, the first trades coming on your screen, we have opened in the with very slim gains, flat, but however with a positive bias, holding on to that 24,800 odd levels at this point of time. Sensex is also opened flat, but however with a positive bias. If you look at the Bank Nifty index, however, that is opened in the red, and if you look at the mid cap index also, that is open in the red. So very slim movements coming in the markets, at least for the early part of the session. If you look at some of the, for the India VIX levels, that is up about 1%. And if you look at the Nifty Pharma index, like we were talking about earlier, it is flat in the trade but with a negative bias. On the other hand, if you look at Nifty IT index, down about 0.1%. Nifty Energy 0.1% uptake. However, if you look at Nifty Metal Index, that is showing a good momentum with about 0.4% gain. On the other hand, if you look at the broader end of the markets, mixed trade coming in, a very slim gains coming in from the broader end of the markets, mid cap and small cap indices, both of them up about 0.1%. But yes, let's quickly take a look at the top gainers and movers on Nifty 50. L&T soaring in the trade with about 3% gains on the back of good Q1 results. Brokerages have been quite positive on the counter, given that the order flow momentum looks quite positive. Asian Paints also doing well, given that brokerages have been quite positive on the counter, given that the company reported a good number from the decorative paints business, and of course they believe that the competitive equilibrium could be reached in FY27, given that the demand commentary was quite positive and the management is quite positive on the early onset of the festive season. So Asian Paints doing well on the back of that. 0.5%, 0.5% gains coming in there for Asian Paints too. On the other hand, if you look at Bharat Electronics doing well with about 1% gains. Tata Steel, Hindalco, some of the metal names doing well with about 0.5% gains or two. On the other hand, if you look at the top losers, that looks like your Tata Motors with about 3% cut coming in. Asian Paints has now declined in trade with about 1% cut. HUL also seeing a decline of about 0.8% ahead of its Q1 numbers. We have Dr. Reddy's Lab also on the Nifty 50 charts, and Bajaj Auto and Infosys also seem to be not doing well in this market at this point of time. But yes, let's shift focus to Varun Beverages. Let's take a look at how that counter has been doing, because even they posted a good set of numbers. The counter is doing well today in today's trading session with about 2% uptick. And if you look at the brokerages, they have remained quite bullish on the counter. If you look at Jefferies, they've given out a buy call on the counter and they've raised the target price to about 600 rupees per share, given that they also have increased their EPS estimates by about 3%. Even Nuvama has maintained a buy call on the counter, and they believe that given the miss in key quarter, they have cut the EPS estimates, but they believe that they have still reiterated a buy call on the counter for Varun Beverages. If you look at the past 1 month, the stock has done well, 14% uptick. Ajit, what does the near term suggest? Today the stock seems to be doing quite well.
So, Lovisha, first a disclosure that we have recommended Varun Beverages for investment to our clients with 619 as the upside potential. And yes, we are seeing traction from both fundamental and technical perspective. In the near future, 570 is what we are eyeing as the next positional target, and 490 is the near-term base. So one can continue to accumulate on every dip with 490 as a closing stop loss and 570 as a positional target for next 2 to 4 weeks.
Okay, 570 as a positional target for Varun Beverages. Let's take a look at some of the viewer queries that is dropping on our screen. Naveen is asking the query on NBCC, how the stock looks like. If you look at the past 1 month, the stock has been consolidating with about 6% decline after the June top. NBCC, anything on the counter, or how do you see the counter going ahead in the couple of sessions, Ajit?
So, Lovisha, it's oversold, and now we are, hovering around the medium-term moving averages, and it's trying to form a base around this area. Then probably we can see an attempt of recovery or rebound. But 113, where we have multiple resistances, means we have the short-term averages also placed, and then we have price action resistance also exists around the same level. So the risk reward is not favorable for any strong fresh position. So in case if you are stuck with the long trades, definitely you can stay put with 108 as a stop loss. And let's say once we cross this 113, 114 barrier, then definitely you can review your position for 120, 124 as a position targets.
Okay, all right. That's the view coming in for NBCC. Let's take another viewer query then. Yagnesh is asking the view on TCS, because he's been holding the shares. He's been holding 20 shares of TCS at about 30 to 41 rupees. He's asking whether we can accumulate at the current CMP, at the current market price, and what is the long-term view for the counter. If you look at the past 1 month, the stock has been under pressure, given that the entire IT basket is also under pressure for the past quarter, given the quarterly performance has been quite subdued. But Ajit, for the long term, how does the counter look like?
So, Lovisha, yes, we are seeing correction means from 4,400 to 3,000 levels now, and still there is no sign of recovery. But since it's extremely oversold in the monthly charts, we are already down by 11%. We have a trendline support on the monthly charts around the existing area, means 3,000, 3,050 is a zone. So probably we can see some breather or a rebound. But since he is already holding long position, I would recommend him to wait and let this stock form some decisive sign of recovery before further adding to the position. Because in case if it fails to hold 3,000, probably we can see further decline towards 2,800, 2,850 area.
Okay, all right. That's the view coming in for TCS. Let's take another viewer query. That is your Anunay. He's been asking the view on RVNL, because he's been holding with no profit and no loss. He's asking whether or not it is good to hold, or should he buy REC at this point of time. RVNL, any views on the counter, Ajit? Because the stock has been consolidation in a consolidation zone. Can we expect it to remain there, or how does the couple of sessions look like?
See, the trend looks negative to me. Means yes, the pace of decline has means slightly on the lower side, but the tone is still negative. So since he's sitting on almost in the flat position, it's prudent that he can look to switch from RVNL to REC, wherein we are seeing fresh traction. And in fact, for REC, we expect this traction to further strengthen once we cross 407 area, with 419, 420 being the immediate targets.
Okay, all right. That is the view coming in for both the counters. Let's take another viewer query. Debuk has been asking the view on UPL. The stock has been seeing good momentum from June onwards, up about 12% or so. But can we expect an extension of this positive momentum, Ajit?
Yes, so we are seeing very tight range consolidation after this recent upswing. So probably we can see some profit taking after this recent uptick from 640 to 740 area. And it's going to be healthy as long as we are maintaining above 695 levels. So one should not jump into a trade, accumulate gradually, means in the range of 710 to 725 is something that one should accumulate. Maintain a stop at 690 for the complete position. And in the next positional swing, probably we can see 760 to 765 levels.
Okay, all right. That is the view coming in for UPL. Let's take another viewer query then. Satya has been asking if Allied Digital can be average at this point. So far this year, the stock has been exhibiting negative trend. It has underperformed with about a 32% decline itself. What is your view on the counter, Ajit? He's asking whether it can be average at this current levels.
So yes, we are very close to the long-term averages on the weekly chart, which is around 153 area. So there is a possibility that the stock might witness some respite, but hence the trend is negative. It might witness pressure on every rise. So maybe 175, 180 will be the first area of resistance, and then probably around 195. So if the view is, let's say, long-term, you can start accumulating at current levels, and for the entire position, stop should be at 150.
Okay, all right. Stock should be at 150 for the support. Let's take another viewer query then. Anunya is asking his view on PCBL. Because he's bought the stock at about 368. So he's asking whether it's a good stock to hold for a year, or should he exit. PCBL Chemical, an underperformer so far this year, but he's bought it at about 368, and the stock is up about, from his buying range to about 390. What do you suggest, Ajit, for the counter?
So PCBL, no doubt, fundamentally is a very strong stock, but of late we were seeing that the stock has been hovering in this 100-point range, 340, 440. So of late there was an attempt of breakout, but it failed. And again, we are seeing pressure, means the stock is again trading below the long-term averages. Since he is making decent profit at current levels, I would recommend him to maintain 380 as a trailing stop loss to his existing trades. And in case if it breaches, definitely he should exit. In case if it sees further recovery, let's say towards 405, 410 area, then also you should exit. For fresh buying, one should wait for 440 to decisively cross. Then we'll see a decent momentum to return with 480 to 500 being the positional targets.
Okay, all right. Let's take another viewer query then. Ratna Kumar is asking the view on Nazara Technologies because he's entered the stock at about 1300 rupees. So the stock has seen a good momentum, and 1369 is where it is trading at this point of time. Ajit, any targets that you can watch out for Nazara Tech?
So after the initial surge, almost a vertical surge from 1000 to 1300, now we are seeing gradual recovery. Stock is holding around short-term averages, which indicates the trend is still positive. For a trading stop loss, 1320 is the area basically where we have the immediate support. So that should be the trading stop loss, and one can continue to hold the position. Once we reach, let's say, around 1500 mark, then she may review the position again.
Okay, all right. Let's take another viewer query then. Nitin Shaji has been asking for Aeroflex for the medium-term outlook. Aeroflex, if you look at past 1 month, the stock has been exhibiting a negative trend. And if you look at the YTD charts also, the stock has nowhere to go. But for the near-term and medium-term levels, what can we watch out for Aeroflex Industries?
So Aeroflex, after this recent attempt of recovery, we are seeing again, stock witnessing selling pressure around 200, 205 area. So as of now, it's still holding above the short-term averages, which is okay. Means, but for fresh momentum, we need price action plus volumes. So with 182 as a stop loss, one can continue to stay put. But around 205 to 10, one should look to book profit if the view is short term.
Okay, all right. Let's take one stock in focus because that is buzzing in trade. That's your Dilip Buildcon. We did see that the company come out with its good numbers from its bottom line level, at least, where the net profit has soared about 94% on a Y-on-Y basis. However, the revenue has dropped about 17% and 16.4% on a Y-on-Y basis. But the stock has seen good moves. Today, the stock has been doing well with about nearly 4.65% uptick. What's next? What's the next target that we can watch out for, Ajit, for Dilip Buildcon?
So yes, we are seeing recovery. It's almost up roughly around 7% in this week so far. Decent volumes, price action is above the key averages. So everything looks positive. This recovery can further strengthen, means 525, 530 is something that stock might attempt. So one can maintain the long position with 480 as a closing stop loss, and around 530 one should book profits.
Okay, around 5:30 is where one should book profits for the Dilip Buildcon. Let's take another viewer query. Srichu has been asking the view on Finolex cables. Finolex cables, today the stock is showing mild gains, but if you look at from a 1 month chart, the stock has been on a sliding negative trajectory. What can we expect for Finolex cables? Can we expect the pressure to continue, Ajit?
So the trend is down, no doubt about it, Lovisha. But at the same time, on the weekly charts, we are seeing the stock is hovering around long-term averages. So that could probably cap the decline in days to come. So overall, it's likely to hover in this band, roughly around 860 on the downside, 950 on the higher side. So fresh buying is something that one should avoid until we decisively cross 950 barrier with 1000 as the first target, and then we'll see the fresh momentum towards 1100 plus zone once we surpass 1000 levels.
Okay. Let's also discuss about one particular stock that is buzzing 5% upper circuit. That is your GE Vernova. The stock did report its June quarter performance where it was a beat across all metrics. Profit more than doubled and revenue also increased by about 57% on a Y-on-Y basis. If you look at the EBITDA levels, that also showed about a good 111% increase on a Y-on-Y basis. So yes, revenue, however, that has increased by about 39% on a Y-on-Y basis. Today the stock has hit about 5% upper circuit. What can we expect the next levels to be, Ajit?
So Lovisha, one can continue to look for play the momentum. So as long as the stock is witnessing this traction continuing with lower band as a stop loss, one can continue to play, but do maintain strict stop losses because it's a high beta counter, and there could be a possibility of sharp profit taking also once the trend reverses.
Sharp profit taking could be possible once the trend reverses. That's the view coming in for the counter. Let's take another viewer query then. We have Yagnesh is asking the view on Colgate because he's been bought the stock at about 25-26 rupees, and he's asking whether we should accumulate more at the current market price or what is the view for the long term. 25-26, the stock is seeing a little bit of a downtick. Today also the stock is not doing well with about 0.2% decline. Past 1 month also the stock has not shown any impressive moves. Ajit, what can we expect on a levels perspective? What should he do at this point?
So Lovisha, Colgate, it's almost like 3745 was the record high in the month of October 2024. And since then, we have been seeing gradual decline. Now the stock has reached to its major averages, long-term averages around 2178 area on the weekly charts. So probably we can see some consolidation, but I would recommend to wait for some sign of recovery, because in case if it fails to hold this area, then probably this correction may continue with 2000 as the next major support. So yes, in case if the view is long term, they can start accumulating at current levels, but do keep a room till 2000 levels to add more.
Okay, all right. Let's take another viewer query on that note. Naveen has been asking the view on AFL. How does the stock look like? It did see a good momentum up till June, but after then the stock has given out most of its rally. What can we expect going ahead for the near term at least, Ajit?
So Lovisha, in the last trading session, it was a very sharp recovery from 100 EMA with very strong volumes, almost 5 times of the average volumes. So tone looks positive. We are very close to the record highs also. So with 1915 as a trailing stop loss, you may stay put. And let's say once we cross the record high area close to around 2080, we can see next leg of the up move. So overall, the tone looks positive. one can maintain with 1920 as a stop loss.
Okay, 1920 is a stop loss for Affle. Let's take one stock in focus, that is your NTPC. The stock is giving out about 0.5% increase. We did see NTPC, the stock, the company did see a net profit rising about 6% on a Y&Y basis. However, the revenue slipped about 4.2%. However, the stock has been stuck in a range between oscillating between that 350 to 330 rupees. Ajit, what can we watch out for? Your modest set of results coming in from the June quarter at least.
So it seems like consolidation to me, and probably some accumulation also at the lower end. You were right that 330, 345 is broadly the range that the stock has been hovering, and where we have the long-term averages also plays around the upper band of the same. So once we cross this upper band around 345, 348 decisively, then we can see the next leg of the up move or sustained recovery towards 370 area. So as of now, one can continue to accumulate. 330 on the closing basis should be the strict stop.
Okay, all right. That's a view coming in for NTPC. Let's take another viewer query. Anand Roop is asking the view on AFCONs and whether it's a good investment at the current market price. The stock has declined about 8% in the past 1 month. But for a medium-term suggestion, what would you suggest, Ajit? Is it a good time to buy the stock?
So Lovisha, it's still struggling. Means in a market like this, wherein we are seeing strong traction across the board, it's still struggling around 52-week low. It's just not a good sign. Means though we may see some intermediate rebound recovery phases, but the trend looks negative. So as of now, I would recommend to avoid such stocks which are trading closer to their 52-week low.
Okay, okay. All right, just one last question before we let you go, Ajit. Anything that you're finding interesting in this market, given that we are into the earnings season too?
Yeah, so Reliance, Lavisha, is something that one should be focusing on because due to the oversold positions and existence of major supports around 1380, 1370 area, we are seeing some base formation, in fact, a recovery attempt also. So gradually we can anticipate 1445 as an immediate target, then 1480 is something that Reliance can test. So one can look at Reliance for fresh long position. Then from the pharma space, Dr. Reddy's also we have seen strong retest of the long-term averages followed by a rebound. So there could be further consolidation, but the overall tone looks positive. So here also one can look to accumulate at current levels with 1260 as a stop loss and 1340 as a target area.
Those are the stocks that we need to watch out for. But with that, we have to let you go, Ajit. Thank you so much for your time and joining us.
Thank you.
Right, let's take a quick check of the markets before we move on to our next guest of the show. We have the Sensex and Nifty showing a good recovery. Sensex up about 100 points and Nifty is above that 24,850 levels. So yes, so we have picked up momentum from yesterday itself, and we're showing a good sign of a positive momentum. If you look at some of the sectoral indices that is contributing to the up move, that is your Nifty FMCG, Nifty Metal Index is doing well. So both of them are doing well. Broader end of the markets are also in the green at this point. Mid caps, however, it's seeing a little bit of a pressure. It's down about 0.1%. Small caps, however, holding the fort with about 0.1% gains. On the other hand, if you look at some of the large movers coming in from Asian Paints and L&T, given that both of these stocks are doing well on the back of its June quarter performance. But with that, let's quickly move on to our next guest of the show. We have market expert Anshul Saigal, who is joining us right now. Anshul, good morning. The underperformance in the markets is quite real, and but now that we have the treasury yields which is rising once again, dollar index is strengthening, are you seeing any other risks which is building up in the markets?
Good morning, Lovisha. Thanks for having me. If there is one thing that I've learned over the last 20, 25 years being in the markets, it is that I need to focus on things which are in my control. And what is it that is in my control is only two things. One is buying quality businesses, and second, buying them at reasonable valuations. The macro situation will play itself out, and things will change over a period of time. We've seen multiple cycles over the last 20 years, and Sensex has moved from 3,000 to 80,000 plus, right? Surpassing all of these volatilities. I dare to guess that it will be something similar going forward from the current volatility and uncertainty in the markets as well. It will be the quality names which will actually compound over a period of time and create tremendous wealth. And so that is really what one should be focusing on. Having said that, there is clearly some uncertainty on the anvil because of various macro issues that are playing out today. Of course, there are multiple wars that are happening. There is interest rate uncertainty. There is also tariff uncertainty. But given the strength of our economy, my guess is that we will surpass all of those issues and go from strength to strength. So, my recommendation to your investors would be, or your viewers would be, that they should focus on really buying quality businesses, not for the short term, not for the next 3 months, 6 months, but look at longer term time horizon, 3 years, 5 years, 10 years to create generational wealth. And that is what is ahead of us in this market.
Okay, okay. Anshul, but we have had the earnings season so far, and it's nothing much impressive when it comes to your IT and banking earnings so far. But how do you see the valuations at this point of time? Do you expect further adjustment given that the markets have been narrow so far as well?
IT clearly, Lovisha, has been a disappointment, and that was to be expected because of all the issues that surround IT with regard to AI, with regard to slowdown in their demand environment, etc. And that is clearly reflecting in their results. Now, it is up to the investor to really focus on the risk reward metric in any sector. And here is a sector which grows single digit, low single digit, or in many instances even doesn't grow, and is trading at 25, 30 times price to earnings. That doesn't look like a very favorable sort of a metric as regards absolute return generation in this sector. So we have been on the sidelines in this sector because the metrics just don't match up. Growth is very tepid. Valuations don't look cheap, and as a result, the setup is for this sector really not to do much going forward unless one of those two things changes. On the banking and finance side, particularly private banks, we've seen some sort of a variability in earnings. Some banks have done reasonably well, others have not. And those that have not done well have been punished. The ones that have done well have been rewarded. And our judgment is that this is a space, particularly banking, where the risk reward remains quite favorable. Look at the bellwether HDFC. It used to trade at a premium to Nifty. It used to trade at 4 to 5 times price to book. Today it trades at 2 times price to book and a discount to Nifty on price to earnings basis. Now that tells you that much of the uncertainty is in the price. I'm giving that example not as a buy or sell call, but just to show what's really happening sector wide. There is a little bit of tepidness in expectations, which is reflected in how these stocks are trading. We believe there is room for tailwinds in earnings, which should reflect in stock price up moves also across the sector, but not in the short term with a 2 to 3 year time horizon. On the NBFC side, again, there has been uncertainty on regulation in the last 2, 3 years, and that seems to be abating. The regulator seems to be believing that this sector is critical for last mile credit infusion into the economy, and so they are moving favorably towards this sector. In that context as well, NBFCs look interesting. So finance interesting, IT not so much.
Okay, okay. Anshul, let's not also leave out insurance at this point of time. We've seen good numbers from HDFC and SBI Life, both of them. Do you expect the sector is up for a re-rating going ahead as well?
That sector as well, Lovisha, for a very long time has consolidated because really much of the earnings uptick was built into prices. Now we are seeing with this consolidation having played out for a really reasonable period of time, and earnings starting to tick up, particularly on life insurance space, there may be room for a re-rating. And also on health, it does look like there are tailwinds because valuations have corrected and earnings seem to be turning around. So positive on that space as well.
Okay, okay. What is your assumption from the consumption space so far that they have reported earnings? We have Asian Paints that reported some of its Q1 results. Then we had Colgate also reporting, and we have HUL which will be reporting, later this week. Anything that you're watching out of in terms of numbers or even commentary perspective?
Very different trends in various segments of the markets. Just to tell you, I was speaking a few days earlier to a value retail company management, and they indicated that demand patterns are very strong. That got reflected also on one of the value retail companies' results, which were quite robust on both revenue growth as also margin expectation. So clearly, in that space, there are tailwinds. On the other hand, if you look at consumer durables, particularly electrical consumer durables, there seems to have been a weak quarter this year, this previous quarter, and company after company has been declaring weak numbers. But then, if you look at cables and wires, very robust numbers across the board. So, varying sort of trends that are visible. Also on staples, one doesn't expect much uptake in demand. It looks like that space again is likely to be tepid on demand patterns. As I mentioned, it is a very varied sort of outlook that one is seeing from the consumption space overall.
Hmm. Okay, okay. Anshul, we also had some of the defense numbers which were reported. We had Parad's Defense, Mazagon, Dog, which didn't really impress the street. But do you expect whether, the street had been, betting on the defense names for quite some time. Do you expect the sector to go undergo a derating from here on?
Lovisha, I was speaking to someone about this sector just recently, and I mentioned that if someone offers you a pristine diamond, which is worth a crore of rupees, and says that I'll give this to you for 2 crore rupees, clearly it is not a favorable bargain, right? Because you're overpaying for that pristine diamond. It may be the best diamond in the world, but you're overpaying for it. It is a somewhat similar situation in defense as well. Now, let's take the example of a Bharat Dynamics, which, say, 2, 3 years back used to trade at 3,000 crore market cap. Until recently, it rallied all the way to 60,000 crore market cap. Earnings are not up 20 times, but clearly the stock and the market cap is up 20 times in this name. Now that tells you that most of this uptick in valuations is because of price to earnings multiple expansion, and so much of the future earnings are already priced in into this space. This same trend is visible across the sector in company after company. Of course, demand patterns are very robust, but such an up move, such a strength in the sector needs to be digested. Over ownership needs to come down for the next leg of rally to actually sustain. And which is why we are seeing that while results are coming out robust for many of these companies, but the stocks are doing nothing because much of the upside is already priced in. So I would be a little cautious on this space. It is very good as regards tailwinds on demand, but most of that demand tailwind is already priced in into stocks.
Hmm. Okay, okay. So, so far, if we look at on an aggregate basis, IT has been a miss. Consumption is also not delivering as much as, the street was expecting. However, banking is somewhere in conjunction to what the street was expecting. Do you expect this earnings downgrade cycle that everyone was talking about earlier to slow down from here on or to remain on the similar lines, or what are you expecting?
Lovisha, the last year, the expectations for this year's earnings growth for Nifty were about 11 to 12%. Now that got downgraded to 5 to 7%. And it looks like so far in this quarter, this 5 to 7% earnings growth trajectory expected is not getting downgraded any further. So it looks like it's going to remain within this range. If And also, look at the infra bellwether, which reported yesterday, as also the paints bellwether. It looks like again from their commentary that there is tailwinds on demand. At least in the paints category, the downside is already in demand patterns, And from here, maybe trends are for the positive. Given all of this, it does look like we probably won't see material downgrades from here. If at all, there is going to be a consolidation in earning patterns. And, maybe towards the second half of this year, there may even be upgrades because government spending as also private capex both are picking up.
Okay, okay. But anything apart from that, where you're finding that the earnings could also be something that could drive the sector up, or you're finding somewhere that that space is going to be comfortable to invest in at this point of time, or is it going to be completely stocks specific?
Um, while I do think that this year is going to be very stock specific, but there will be certain segments where, as we proceed in the year, earnings will be a positive or a tailwind in our judgment. So NBFCs, banks, that is one space. We believe capital goods. Many of the companies in capital goods space have consolidated. That space may be quite interesting as regards earnings growth going forward. There are, what we saw post GST is that there was a move from unorganized to organized in retail, in manufacturing, etc. We are seeing that trend play out in the distribution space on the supply chain value chain, and that space is seeing tailwinds across sectors, whether it is metals, building materials, or pharma distribution. That space is seeing tailwinds. So many stock specific, sector specific opportunities. Um, Very few broad trends that we can see at this moment.
Okay, okay. All right, Anshul, with that, we have to let you go, but thank you so much for your time and joining us.
It is my pleasure. Thank you, Lovisha.
All right, let's take a quick check of the markets. We had slipped into the, we had come back to the positive territory. We're still holding above that 24,800 odd levels. And if you look at Sensex also, it is up about 100 points at this point of time. Most of the sectors are trading with about positive gains. However, the sector which has been seeing a sliding trend, that includes the likes of Nifty Auto Index, Nifty Media, Nifty Realty also showing us a little bit of a signs of a lackluster move. On the other hand, if you look at Nifty FMCG Index, that is holding well with about 0.1% gains, and the broader end of the markets that show a mixed trend at this point of time, with small caps outperforming the mid caps at this point of time. But we'll watch out whether or not this recovery is sustainable, given that we also have the monthly expiry which will be taking place tomorrow itself. So yes, we'll be watching out for any other moves in the markets at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.